Hello, good morning. It's Friday the 8th. I'm FX Plu, and this is the market brief. So Huw Pill's been on. Remember him? He was that fat middle-aged white guy that they drafted in from Goldman Sachs as the diversity hire for chief economist at the Bank of England. He's been rather absent from the bank's front line for a couple of months now for reasons unknown, but he returned yesterday with a thinly veiled criticism of what his colleagues have been up to without him. And indeed, given the current level of inflation, he probably has a point. He wasn't quite as crass to quote the size of the publicly funded salaries they're paid to keep inflation under control, but Andrew Bailey is trousering £575,000 and his deputy John Cunliffe is on around 200 grand. Meanwhile, inflation is forecast to top out between 8 to 10% against a target of 2%, remember. Hardly looks like good value for money at the moment, does it? Sunak's been on. He's seen a bit of a U-turn in his popularity. Now he's not dishing out free money. Now he's just another politician. And fair game for a bit of hate, apparently. Firstly, his spring statement was accused of not providing any help to the lowest paid, who are expected to see their real incomes fall by around 1,200 quid this year. And now, in what Sunak describes as a smear campaign, he's been accused of allowing his multi-millionaire wife to receive non-domiciled status, a sneaky little tax status that avoids paying huge amounts of tax on her overseas earnings. What can you say? Welcome to the big league, Rishi. Haters gonna hate. In the market, sterling continues to flirt with the 130 level against the dollar, although we held up around 130.50 yesterday. Performance is a bit better against the single currency though. We open a little higher, around 120.30 against the euro. Now over in the US, the Fed appears to have abandoned economic support in order to prioritise driving down inflation. And yesterday's weekly jobless data suggested this may well be the right decision. New benefit applications fell to their lowest level in 10 years. That reached 166,000 new claims. And the 4-week average is now comfortably below the 200,000 mark. That was down to 170,000 new claims for the last 4 weeks. So it looks like the Fed they'll raise rates by 0.5% and reduce the balance sheet by $95 billion. Suggestion is we'll see 60 billion of treasury bonds and 35 billion of mortgage-backed securities there. Alongside that, there's plenty of chatter about the need to front-load the rate hikes. We would have seen 50 basis points in the last meeting were it not for the war in Ukraine, but some Fed officials have projected the need for rates to be 3.5% by year end. That's a full 1% higher than the current forecast for the neutral rate. Pretty punchy stuff. And all that chat of positive action is helping the dollar index move slowly closer to that 100 level. Yesterday we saw another fresh high for the year. That topped out at 99.82. And euro dollar this morning, that opens down around 108.60. That's it from me, capping off another week. Have a great weekend. Join me again on Monday.
If you do not have a clue, then just tweet through and ask FX Blue.